Hello and welcome to a discussion that provides an overview of the cash flow statement. Watching this video will help prepare you for class. It's important that you view this before class so we can learn more together in class. After watching this video, you should be able to state the purpose of the cash flow statement and state the items that are reported in the three different sections of the cash flow statement. The cash flow statement consists of three sections: the operating, the investing, and financing sections. You are looking at the operating activities section of the indirect cash flow statement of JCPenney. Notice that it begins with net income, which is not all cash, and presents items that are differences between net income and cash received or paid during the period. The operating activities section includes non-cash revenues and expenses, non-cash gains and losses, and changes in current assets and current liabilities. You are now looking at the investing and financing sections of the cash flow statement for JCPenney. The investing section reports cash associated with changes in long-term assets. The capital expenditures line is cash paid for property, plant, and equipment. There are proceeds from sale of assets and cash paid for acquisitions. The financing section reports cash associated with changes in long-term liabilities and owner's equity. You should notice the payments on capital leases and long-term debt and the dividends paid to common shareholders. The cash flow statement reports how the company generates cash and how the cash is used. The change in cash comes from changes in the beginning and ending balances reported on the balance sheet. The income statement is reported under the accrual basis. Amounts are earned and incurred and do not represent the change in cash for the period. The cash flow statement provides information about a company's ability to grow the company and to repay liabilities. It provides valuable insight into a company's strategy that cannot be seen by looking at the other financial statements. The operating activities section reports the amount of cash the company generated from servicing customers. Positive cash from operations gives the company financial flexibility. This section indicates the company's ability to grow internally and to repay debt. The investing section of the company reports cash paid for and cash received from selling long-term assets. The amount on the statement is always the cash paid or received. Significant investments in long-term assets indicate the company is attempting to grow. The financing activities section reports items associated with growing the company. Cash used to finance a company is received from long-term debt or from selling ownership. A company either borrows or repays long-term debt. Cash associated with investors comes from issuing stock, repurchasing stock, or paying dividends to owners. The amount reported on the cash flow statement is the cash received or paid. After viewing this video, you will be able to state the purpose of the cash flow statement and state the items that are reported in the three different sections of the cash flow statement. Operating activities begins with net income, has non-cash revenues and expenses, and reports the change in current assets and current liabilities. The investing activities section records changes in long-term assets related to cash. The financing activities section records cash changes for long-term liabilities and owner's equity. The next video will discuss the indirect and the direct methods available to prepare the operating activities section of the cash flow statement. Thank you for being prepared for class. It is very much appreciated.